The value of infrastructure projects in East Africa dropped by 52% in 2016 to $27.4 billion from $57.5 billion in 2015, according to Africa Construction Trends report by Deloitte Africa. The drop is attributable to suspension of some projects and reduction in government expenditure in some countries such as Tanzania. Take a look. Since 2013, the value of infrastructure projects in the region has declined from $67.7 billion to $60.7 billion in 2014, $57.5 billion in 2015, and $27.4 billion in 2016.
These are projects that are in construction, so there need to be yellow machines on the ground. So we've divided the continent into 6 regions: North Africa, East Africa, West, Central, and South. And we've been tracking the projects both in terms of the numbers and the value of the projects. And we've seen a shift across the continent from year to year. Currently, the West African region has the most number of projects, which is about 92 projects. The second is the Southern Africa region, and then the third is the East African region.
The decline in the value of projects in East Africa is in spite of stable growth in the region at an annual average rate of 5 to 6%.
Growth globally is projected to increase from 2016 to 2017, so global economic growth is about 3.4%. When you look at sub-Saharan growth, we're looking at about 3.5%, which is a bit down from previous years. Kenya is actually the leading country in terms of forecasted growth within the region, and we're looking at a growth here at about 6%. And so that's also quite important in terms of the drivers underpinning that growth.
11 of the 43 projects in East Africa are in Kenya. Among them is the $4 billion standard gauge railway between Nairobi and Mombasa, Lake Turkana Wind Power Project, and expansion of the port at the coastal town of Lamu. The report shows that 46.5% of the projects in Kenya and elsewhere in Africa are in the transport sector, while energy and shipping took up 25.6% and 9.3% respectively.
There's a lot of demand for the space in Kenya. There is a recognition that the region is growing, and these are long-term perspectives that are being taken. So we are seeing a tremendous amount of appetite for infrastructure and related projects, and for investment in those segments. People are taking a medium to long-term view, and they recognize that the impact that the continent and the region will have in the global economy.
Most of the projects in the region are government-owned at 86%, drawing financing from African development finance institutions, China, and international lenders.
Our viewpoint is that governments ought to be in a position to identify what mode of financing delivers the project at the best value for money. Sometimes this is with public financing, sometimes it's through a PPP, sometimes it's through something else entirely, right? In the case of Mombasa Port, for instance, I mean, this is they're taking a look at this terminal and saying, well, this is a public use terminal, at least for now. This is not going to be a concession, so we will finance it on the public balance sheet. In this case, actually, they're doing something quite innovative, which is that they're looking to finance using the balance sheet of the Ports Authority itself, rather than the government.
Other players in the infrastructure investment scene in the region include donor-funded institutions such as Trademark East Africa, which is running numerous projects aimed at increasing intra-regional trade.
Our program has 2 major objectives. One is to lower the cost of trade, and the other is to boost the ability of East African companies to participate in that trade. So that, in terms of transport, the focuses have been on what are perceived to be the greatest bottlenecks to trade, both with international markets and intra-regionally. For instance, Trademark has a great deal of investments in 2 areas. Those are the seaports, Mombasa and Dar es Salaam, and the border crossings between EAC countries and between the EAC and other countries as well. The border post program is now complete. That is close to $100 million in total, and covered the development of one-stop border posts at 5 major border crossings within the EAC. I mean, one example, for instance, is Busia.
The private sector has not been left behind in bringing the projects to life, but its contribution remains notably small, financing about 4.7% of the projects while owning only 2.3% of them.
What we are seeing now is the birth of a new PPP type structure in which the government has recognized the value of the private sector in getting involved in these mega infrastructure projects. And as you know, there's a very healthy and vibrant PPP unit in Kenya right now, which is beginning to roll out the 5 new roads and 5 new major road constructions that are going to take place. So there is a massive role to play in the private sector. Again, as I mentioned, the continent, East Africa, are growth opportunities, and so investment appetite is high for those. Of course, I should have mentioned ports as well. That's also an area in which PPP has a role to play.
Increased investment in infrastructure in the region will continue to drive economic growth in the short term. However, experts reckon that bankability of projects is still a challenge that should be addressed to keep investor interest alive.
There is no financing gap. There's an ocean of financing available out there in the world for properly prepared infrastructure projects with good credit. It's developing those projects and articulating that credit, which is the really difficult part. So still in the region, I mean, the region has made great progress in terms of gaining the capacity to prepare projects. I think there's still more work to do.